Rupeeting, where we deliver intelligence on a weekly basis. None of this has to be. Sorry. Today we got on board Sagar.
Chaitanya. Hi guys, Pradeep here.
Now that introductions are done. Okay, so none of this has to be taken as investment advice. Whatever we say today is only for education and entertainment purpose. Today's topic is you'll have to guess it. Chaitanya is going to
And Pradeep.
he's going to narrate a tune, which is a jingle which is used in the ad. You have to guess which ad it is. Put it in the comments
Which
below.
product it is?
Okay, which brand it is? Put it in the comments below. Okay,
So first one is Pradeep. Start.
भैया ये दीवार टूटती क्यों नहीं?
Now, and what current is going is घर जिंदगी में सिर्फ एक बार बनता है. फिर प्रोडक्ट का नाम आ जाता है. अगर आगे की लाइन बोलूँगा तो पता चलेगा.
ठीक है, anyway, so
comment down below before the 2 minute marks. अरे वीडियो में 2 मिनट से पहले कमेंट करेंगे पॉज करके.
okay, cool. Anyway, so the company
और आज सरदार के बारे में बात कर रहे हैं. जो प्रोडक्ट है उसका भी टैगलाइन है ना, सम सरदार. XYZ प्रोडक्ट है जिसका सरदार है, जिसके बारे में बात कर रहे हैं.
okay. आज का प्रोडक्ट वैसे कमल सीमेंट है and कमल सीमेंट nobody would have heard of, but it's a listed company, very small, based out of Gujarat. It's called Shree Digvijay Cement. Shree Digvijay Cement is also something that you wouldn't have heard of because it's a very, very small company. It's hardly 0.2% market share in the entire cement industry. So it has a capacity of 1.5 million tons, and India overall has a production capacity of cement of 550 million tons. So it's very minuscule in the overall scheme of things compared to your larger players like Ultratech, Shree, Dalmia, Ambuja, LCC. Compared to that, Kamal Cement is absolutely nowhere. It is a Jamnagar-based company, and it mostly sells its products in Gujarat as well.
You know why it's called Shree Digvijay? Why? I'm asking you why. सीधा पूछ लिया.
Oh, I heard you might be knowing the answer
because
for this.
their plant is in the village called Shree Digvijay Gram. That's why the name is from there. Fun fact.
Interesting.
This time Chaitanya has learned the history of the name because last time he was called.
He was very prepared.
Yeah, थोड़ा value down हो गया था.
That's why he squeezed it into the podcast this time.
ये तो मेरा सुन लो.
So yes, while the name sounds very traditional and it is from Jamnagar, it is actually owned by a private equity fund. So we'll start with the ownership. We'll go step by step. We'll start with who owns the company, what the company is, followed by a little bit about what the history of Shree Digvijay Cement is, to present and then future. That's how we'll flow through the podcast this time. So ownership over to Pratik.
Okay, so the ownership structure of Digvijay over the years has been very interesting. So it was founded in 1944. So the company started its operations from 1944, and Bangur family was the one who founded the company in 1944.
The one of the Shree Cement.
Yeah.
Same
Bangur
family.
family. I think they had some family dispute, and because of that, Shree Digvijay Cement came into the picture.
Got it.
Yeah, and then in 1998, the company was bought by the Aditya Birla Group,
Okay.
and then they were the owners of the company for what, like around 10 to 12 years, and I think in around 2008 there was this Portuguese company. It was Simpor Cementos. Yeah, I think that's the name. So they wanted to enter the Indian markets, and then they were getting this ready company where production was on. They had this plant which we already talked about in Jamnagar. So they thought that it would be a good option for them, or an opportunity for them to enter the Indian markets. So yeah, the Portuguese cement company entered in 2008 into the Indian markets by acquiring Shree Digvijay Cement. And then I think within a short span in 4 years, I think there was some restructuring going on within that Portuguese company. So because of that, they had to sell this off to a Brazilian company. And this Brazilian company is a market leader in Brazil in terms when you talk about cement production. So this is a very weird name. I actually don't remember the name of this Brazilian
You'll see
company,
the name here.
but it's some like Vorotillerium or something like that. Yeah. So they were holding what like around 75% of the company in 2012, and they for the over 6 years they tried to increase the utilization of the company and to turn around the company. Basically, the company was not efficient enough when it came to production in those particular years, but the company failed. So then came into the picture who are the current owners of the company right now, the True North Fund.
The private equity firm, right?
The private equity firm. So they acquired the company in 2018, and interestingly, this particular fund already is into these construction sectors and related manufacturing sectors. So they already own 2 such companies. So then what I thought was then it must have been a good acquisition for them, considering they have already 2 companies in the related space. So it's natural for them to go for a cement company, and then they took over this company, and currently they own what like around 55 to 56% of this company right now. And they also brought in Anil Singhvi as the chairman of the company. So he's currently the chairman of the company and
Not the
holds-
Z business guy, by the way.
not the CEO business guy. Yeah. So Anil Singhvi earlier was the CEO of Ambuja Cement, and he was in Ambuja Cement for the past 23 years. And now he's working in Shree Digvijay Cement, and he handles
So he's the CEO now.
He's the CEO.
But I think he has done a pretty exceptional job around the company.
Yeah. So like every other, it's a very typical private equity thing to do, right? You enter a company, acquire a large stake, and then you start changing things in order to improve efficiency, grow, etc. So private equity investors usually have a host of knowledge from their previous investments. They have a global presence. They also have a lot of experts on board. So they take over inefficient companies or smaller scale companies and try to ramp it up.
I think they have already 4x their initial investment. So
Yeah. So the company got listed in 2019,
19, yeah.
and since then the stock price is
3x or 4x, I think.
more than that, right?
More than
It was at trading at 10 rupees and 20 rupees. Now it's
But
at
that was I
100.
think COVID though. So
Yeah,
from
yeah.
initial
But that's when it
time-
got listed, right?
Mhm.
So it's already a 10x investment from that perspective.
Yeah, correct.
But like any other private equity investment, there have been several steps taken as soon as they came in. So typical step is that first you come and clean up the existing mess, and then you focus on growth. So the cleanup of the mess is something that we can speak about first. What they did as immediate steps in order to rectify what was going wrong. So probably the 3-4 steps you can highlight, and then we'll move to what's happening currently.
Yeah, so I think firstly, the most important thing, as you mentioned in your history, that the company was not operating efficiently as it needs to be. So I think first they did some operating efficiency wise, they took a lot of steps. So that plus I think they shifted to hold this WHR system, which is called waste heat recovery system. So plus, and they also included renewable energy as a source of energy for the whole plant, because currently for a cement company, major cost is the
Power and fuel.
power and fuel. So that comes from your coal and coke things. But currently, I think 60%
Sorry,
of
so
the
for viewers, it is so in a cement
Yeah.
company you have to heat ingredients at 1400 to 1500 degrees Celsius. So to reach that heat level, you require a lot of fuel.
So limestone goes into that process thing.
So
Limestone is
okay.
supposed to be heated, right?
Yeah.
Limestone and a few other minerals.
Yeah.
Limestone along with 2-3 other elements you mix together, and you heat it so that it melts and mixes. So that is done in a vessel which is called a kiln, and it is heated at about 14 to 1500 degrees Celsius, primarily using coal or pet coke. So that's why the power and fuel cost is the number one cost in any cement manufacturing.
Also, in the same process, there was a lot of heat also was being wasted in the process. So they did it. They not they only in the industry. There's a thing called WHR, which is discussed. So they use that plus other renewable energy options to reduce their dependency on coal, as in because the prices of coal are very volatile and affect directly the margins. So currently, I think 60% of their energy is sourced from these energy sources, and the rest I think 40% only coal dependent. And now I think they're also going through a very big expansion. So they are almost
Expansion will come, but so primarily leadership change,
Leadership change, yeah.
getting in professional management. Number two, saving up on cost by installing a waste heat recovery system.
I just had a question. So, who developed this waste heat system? Because while researching about this company, I saw most of the cement companies in India are now using this system. So, was it developed in India by an Indian company or?
No. So primarily, it's I think it's global.
Okay.
It's not an Indian phenomenon because the cement production process is similar across the globe. The heat requirement is similar. Everything is similar. It's a commodity after all. Right? The entire system is based on the fact that when so much heat is generated while burning coal, a lot of heat escapes because it's not a contained environment. So a lot of heat escapes during the process. So what the waste heat recovery system primarily does is it traps this heat and it reutilizes the heat in order to reduce the burning temperature required for coal. So if you are providing a certain amount of power to burn that coal or keep it burning at 1400-1500 degrees Celsius, this system essentially reduces that power requirement. So it is just a more efficient way of saying that whatever heat is going out of the system, you trap it back in nuclear.
Basically, you are recycling the heat.
I think it keeps the whole process to cooling down. So if the temperature is maintained at certain level, it's easier to climb it.
Okay, that's it.
So that was used globally, and in India, the interesting story is that Shree Cement was the pioneer in this.
Okay.
So while all the other companies which were at that time Ultratech, Dalmia Bharat, Ambuja and ACC were the largest players, Shree Cement was a very new player in the market. It was like a startup in the entire cement industry. So it brought in new plants. And when it set up new plants, the technology of new plants was already equipped with WHRS. So they had a significant cost advantage compared to the other players because 100% of their plants were new, whereas for the other guys it was about 20 to 40% of their production was from new plants. And because of this, they got a 30% cost advantage. This and they utilized pet coke in their plants. Because of which Shree Cement actually was the lowest cost producer of cement, and that is a big advantage in a commodity.
Yeah,
So it could
if
actually
your costs are low, you are really
you're
making
profitable.
money, yeah.
And you're able to offer discounts.
Yeah.
And that's what these guys did. So they never focused on brand. You heard of Ambuja ads, ACC ads, Ultratech, everybody's ads, you know. Shree Cement, abhi you started hearing Bamboo Cement ki ad. नहीं तो पहले Shree Cement की ad नहीं
पहले
आई.
तो सिर्फ अंबुजा एंड अल्ट्राटेक
Yeah.
they were spending heavily on ads मतलब
But at the same time, the market share was growing fastest for Shree Cement.
okay,
Because these guys were selling bulk cement.
they were working behind the scenes then.
Yeah. And because of that pressure, everybody else started installing WHRS into their factories,
Interesting.
including Ambuja and ACC, which had actually one of the oldest plants. And I think which is a great learning from the CEO itself, right? If you're getting leadership from Ambuja, you're getting 20-30 years of experience and several cycles, competitive cycles in the cement industry. So this guy knows that immediately आके अपने को ये WHRS करना है, renewable करना है, cost कम करना है, because it is only one plant.
So yeah, they only have one plant, yeah.
So it is only one plant. What can you do? You can reduce the cost first thing.
But then at the same time, I think as you said, the plant is old. So this company has been operating on the same plant since 1944.
Yeah.
So then I think, as Chaitanya mentioned about the operational measures, so I think one such important measure which they took was during COVID. Obviously, the whole world was shut down. So obviously, the demand for cement was very less. So I think what the smart move the company made was that they shut down their plant temporarily during COVID when the demand was low, so it wouldn't hurt their business. And they undertook maintenance and repairs by increasing their efficiency. So which you can really see. So before COVID, the company was the plants were operating at around 75 to 80% of capacity utilization. But post those maintenance and repairs, now the company has been utilizing its capacity at 100% or over 100%.
Yeah.
So I think that was one major change which the management brought.
Which is the funny thing about cement. Companies operate at 110-120% efficiency also. So utilization, which is a very weird thing, but they do that by separating the clinker and grinding capacity. So you produce cement, clinker in the facility, grind it somewhere else, and hence increase the cement production capacity over and above what the plant can produce. So that's how they go above 100%. It's very weird to hear that you're operating 120% capacity.
मतलब मैं तो सोच क्या सही कंपनी है यार, 100-120 पे का सही है.
Yeah. which was, I think, also why they could increase the capacity of their plants without actually putting on new capacity.
Yeah.
So they went from 1 million ton to
cost
1.2
stayed the
million.
same, but the production was increased.
Increased. So efficiency improved, so you improved the plant production capacity itself by 20%, which is great. And finally coming to the last step now, which is focusing on growth.
Yeah.
Because at the end of it, they did contain costs and resulted in one of the most profitable companies at a margin level is Shree Digvijay right now.
Yeah, I think their EBITDA per ton for this particular year was around 1,139 rupees, which is better than the leader Ultratech, which was at around
Shree Cement and all.
Yeah, they were in around 1,000s, but this is 1,100. So
And I think the return ratios are, I think it's probably company in the cement sector, which is a net debt free company.
It is a debt-free
Yeah,
company.
it's a debt free company, and the return ratios like ROC and ROE both are about 20%. So no net debt free company has able to achieve this in cement sector. So that also showcases the job that the PE fund has done to the company.
Which is also a very important metric for a cement company. The ROE, for example, for a lot of cement companies, Ambuja and ACC, when they were owned by Paterson, the largest argument they had for not expanding capacity was that our ROEs are less than the cost of capital. So if the cost of capital itself is, say, for example, 8%, and your ROE is also 8%, you're not making any money.
And it doesn't even make sense to
So it doesn't make sense to
it.
expand.
Yeah, to do
So
business.
why will you take on more capital in order to make lesser money?
Yeah.
It doesn't make sense from a business perspective. And that was the number one problem and reason why Holcim did not invest in Ambuja and ACC. This is sort of going through the same trajectory. So for 10 years, Ambuja ACC saw no growth. They were at one of the highest profitabilities in the industry. And the stock didn't go anywhere. Similar with Shree Digvijay, the profitability is highest. There was no market share gain because there was no volume growth over the last many years. And hence the stock का तो history नहीं है. लेकिन अभी what is imperative for it to see any growth or re-rating is that capacity should increase, which is what the management has now started doing, right? So again, 2-3 steps taken to.
So I think they are doubling their capacity from 1.5 million tons to now 3 million tons, and I think that will come around the third quarter of FY25, which I think December of this year itself. So the point that you mentioned, the market share growth, that will only come by if you expand your capacity. So that is happening, and one interesting thing is that's a brownfield expansion. So in general, if in cement industry, if you do a greenfield expansion, so it costs you around 600 to 700 CR for 1 metric tons of capacity. But I think for Shree Digvijay, 250 CR of capex will be there, and by that they will increase by 1.5 million tons. So that is also a very good return accretive expansion that that's going to happen. So after that, doubling the capacity by, I think in that also they're gonna do a 50-50 split of the 250 CR capex. So 50 will be equity debt with that. Yeah. And that also the management is saying that it's not gonna be a long-term debt. It's gonna be a short-term one only. So they will be probably clear it out their books in like next a year or so.
But they've also acquired limestone to fuel that.
I was just coming to that point. Yeah.
So that is for a very near term, the 1.5 to 3x. But I think longer term, as you were saying, that the
Limestone addition. Yeah. So I think the company was facing problems earlier in acquiring limestone, and limestone is a very important raw material when it comes to cement. So now the company has acquired 3 mines, and out of which one mine they've gotten the environmental clearance. So the management was saying that now currently they are on 27 million tons of limestone reserves, which they can expand up to, or they have plans of expanding it up to 50 million tons. So which can cater to the future demand as well.
2x there also.
Yeah.
So
So if the current capacity is 3 million, for example, per annum, 27 million tons of
Current
reserves will last you about 8 years,
8
to 9 years. But if they increase it to 50 years, 50 million tons, then that further obviously increases. And may give them the ability to probably add another plant as well.
Yeah, they can do that in future. We can see them doing this if this plant also operates at such proper capacity. Then obviously I think they will, because I I think to grow they will have to enter into newer markets because currently they're just in the western region, right?
Yeah. Mostly.
But which is also okay because even in the west, so even if you look at the demand,
Yeah.
it is equally split between north, west, south, east, and central. So even if you have say about 100-125 tons of million tons of demand within the western region, despite having 3 million tons, they are not anywhere close to market leaders. Market leaders are sitting on 40-50 million tons. So these guys are still very low.
So even if they stay in one region, it's not gonna hurt them.
It's not gonna hurt them. They'll be easily. So that's the thing, right? Like even if they double capacity, sometimes for a lot of companies the problem is or the situation is how do you get your capacity or the supply absorbed in the market. But for these guys, if they're just at 3 million, easily their mal will get absorbed into the market within a very short period of time. So they don't have to struggle very hard to sell and offer discounts and hurt their margins and stuff like that.
So advantages of being a small player is very hard for them at least for the future.
So they can scale up 2x, 3x on a very small base very easily. And especially with the kind of management and ownership that they have now.
But now I have this interesting question. So currently this is owned by a PE fund, and PE funds are generally known for making exits. So what could be the future for the company then if a PE fund is exiting?
लगाते हैं True North को phone.
No, but that is a very interesting thing to think about.
Yeah, no, but cement companies in India at least the M&A environment has been very healthy. You've got larger players, especially UltraTech acquiring a lot of smaller players time and again. So they are a full acquisition machine, which is very rare to see in an asset-heavy industry like this. It is more common in like tech companies and where affiliation is very easy. But looking at UltraTech and how they've gone, recent acquisition by Adani of both Ambuja and ACC, you've got a lot of examples in the cement space of acquisitions. So
I think that also tells you about the Indian infra story in general as well because we have a really long way to go compared to the other countries. So I think that's what makes them more optimistic about the sector, I guess.
So yeah, great industry, small company doubling its capacity, plus thinking about the long term also by acquiring limestone reserves to a larger extent. Great management, set for both earnings growth as well as valuation relating if this pans out and whenever it pans out. So great story overall.
Definitely watch this one. Cool then.
Okay, bye. See you next week.